Hey everyone, Nick here. Happy holidays. I cannot believe we're in Christmas week already. So this is a happy video. It's going to sound a little boastful at times, but the goal is easy. I have one request of you. I want you to promise me that you will take a small New Year's resolution for just one little trick to look before you leap into any trade for next year. Most times, I bet you, almost all of you never make bad choices as to what stock to take, but timing is really where the mistakes happen. This is the S&P. It's pretty violent of late, so you can neutralize that by educating yourself just on simple tricks. I don't expect you to become a chartist or an analyst. Just one last check before you pull the trigger on a stock trade. Just look left on the chart. I'm going to share with you several examples on different time frames that prove that it's worth it. And if you're not doing it, then you're leaving on purpose a really good tool out of your toolbox. Okay, so the pandemic changed things, and investment now is no longer the same. I hope it goes back to being the same, but for now, we have to deal with a lot of idiots out there. So the more tools, the better. They give us the edge over the average idiot out there. Okay, so how can we do that? The simple message is just look left. I'm going to give you an example. So if you're part of my group, then you know some of these things I'm going to mention. So yesterday, I shared a trade on Upstart just yesterday. Today is the 21st. And I sent out a full video, probably 12, 13 minutes, and it had clues, technical clues, as to why I chose today. And yesterday, why I chose it to go long then. Today it's up 13.7%. Great result. I can close it and walk away from it, because if you did options, then your profits are way more than 13%. So great entry point. Wasn't luck though. It wasn't luck. So in July, I shared another video, said let's get long Upstart, and then this happened. And then I said, all along the lines, I said many times to many people asking me, is it time to get long again? Is it time to, no. Why not? Because it would be an opinion. I took the trade on a fact that it was tight and there was actually a move coming from a technical perspective. I want facts to back me into another entry point. So they're saying, but it's down almost all the way. So if I had taken longs here, it would be almost all the way back to base, but there's a gap, and it wasn't base, and there was about a 20% drop to get me back to base. No, I don't want to, thank you. So finally, it let go of that base and came back to the actual starting point. Now I'm interested. Yesterday, I said, you know what? Now I have facts on my side. So the charts, if you choose to ignore them, actually contain facts, not opinion. So here it would have been my opinion that it stopped falling. Here it was not my opinion that it stopped falling, because it did actually fall into the base for the whole rally. So it is more fact than opinion. Here it would have been more opinion than fact, because there was another 20% to get to here. It doesn't look like much, but that is 20% to get back to yesterday's bottom. Okay. So that's one example. It wasn't luck. It was luck that it was up that much, but it wasn't luck timing-wise. Now it could still revert lower, but at least I know I've got a good start. At least I didn't make a mistake. So step one really is from that. The goal from that is to help you avoid the mistake. So you're saying that was lucky. It's not lucky. I'm going to share with you something pretty cool, but it's more granular. So this is a one-day chart. You're saying it's different on different charts. I'm saying it's not. Let me show you. If you're part of my group, then you know that I recently started sharing live rooms. So I have this room with 6 charts and another 6 charts here. And these are the markets intraday. So these are designed for fast traders that want opportunities intraday, or somebody that wants to learn charts. If you're in the room today, you definitely learn charts just from my comments. And I want you to pay attention to something. By the way, here, I don't have any tools. There's no MACD, there's no RSI, there's just simple volume, which I don't use. And these volumes I use, but I didn't have to use for this one. It was just an added layer of information. So you do not need tools. for this information. No tools here, absolutely zero tools. There's no MACD, no volume profile, nothing, okay? So what I'm going to say is based on one simple thing that I'm asking you to learn, to start practicing, looking left before you leap. The market opened today green. The small caps went open 1% and never looked back. They closed 3%. The S&P opened a little bit up, and then it faded almost to flat, slightly up, and then it faded again. So 15 minutes into the day, I said, you know what? If I were to bet long, to take a short-term trade today, this would be the time I would start long the SPY or the QQQ, the S&P or the Nasdaq. It delivered a quick bump. If somebody missed the entry point and they stayed in it long, they went back a little bit lower. I said, if you haven't done the first time, or you did and you forgot to get out, I would do it again here. Meaning, stay long, it's going to bounce again. And then this happened. Okay, so clearly it was a winning trade. But that's not the important part. First of all, why did I get long here? Because I looked left. And we had gotten to the baseline, and then we went to the baseline again and slightly lower. So this was the same note. I looked left. Hey, we're back to base. Boom, popped. We're back to base. Boom, popped. They didn't go back to base. They just went. Okay, so that's a different conversation. So the point is, I looked left, opportunity, let's take it, delivered fast results. This was on a 10-minute chart. It could have worked on a 5-minute chart. The other one was a daily chart. So, okay, you're saying it's still a fluke. Okay, I'm going to come to blow your mind right here. So if I didn't have 150 people in the room today that saw me draw this live, I would call myself a liar. And this happened yesterday with the VXX, and on Friday with the IWM. And that win on Friday was 20 cents turned into a triple or a quadruple. Anyway, it was a big win in dollar terms in the end for somebody that took it. So but it's all the same concept. Look, there are no tools. I drew this by hand. So this was the first dip, and let me see, and then the second dip. So the first dip yielded some profits, and then they went lower. The QQQ was a little weaker in the morning, in fact. So here, I said this is where I would start my second attempt, long the SPY or the QQQ. We know already it worked for the SPY. And then here-ish, I drew this. I said, I think it's going to do this, and I zigzagged this live with everybody in the room. So let's see how well I did. And again, no tools. So I said they would pop and drop, and look how they dropped along the line. I said they would pop and they would drop. The drop came almost exactly to my bubble. And then I said they will pop, fade to fight over the line. I drew this line ahead of time and this box ahead of time, and then they would go to here. So they popped. They didn't even fade. They just took it out, came back to my line, and then popped. Look where they stopped. So that's the point. I did not pick this guy randomly. Look left. Boom. So if you still are a skeptic about data in the charts being important about future price action, then maybe I failed. But I promise you, this happens 1,000 times a day across all the charts. And they fought over it all day, and then they finally broke out. You're saying, okay, you were wrong. No, I wasn't. This was the one leg, and I'm going to zoom out to show you another time frame where this is same ticker. This was 1 minute. You see it? 1. I'm going to go 15 minutes, same ticker, reset the chart, and move it sideways. Now you see that's the little jag you were looking at right there. That's the yellow box you were looking at right there. This line was there already. I thought it would do this, and then this, and then this is the third leg. We're right here. So I have a downside scenario in case they decided to fail, and I will move that downside scenario over. How do I get these levels? I'm simply looking left. Look left from here. That's not a coincidence where they broke out the second leg. Look, why did I put this line here? Look left. That's how my lines are accurate. I just look left. Okay, so that's as easy as that. So practice looking left before you're leaping into a trade. That's all I'm asking. I don't want you to be drawing lines or anything. So how could you put this to real life example? Lucid. Did we do this already? I'm drawing a blank. Great company, great car, a good company, great car has to prove itself as a great company down the line for Wall Street. So somebody that bought it here, and if they had taken this message last year, they may have saved themselves trouble. You're saying they're in it for the long term. I'm saying, okay, but they could have had twice as many shares if they waited 2 weeks. I mean, how crazy is that? If time is not a problem, why rush in at the very wrong time? Well, how could they have known? What's the message of this video? How could they have known? What's the message of this video? Look left. Oh, wait, what? So, if I wanted to buy Lucid on that day after it just ran 100% from here, not counting from here, is this 100%? That's 260%. If just from here, from that one decision that, okay, they're going to start delivering cars, that's 104%. If I decided to buy a stock, first of all, I shouldn't buy a stock after it just rallied 100%. You missed it, wait for a dip. That's a rule. Write it down. So regardless, let's say you're still anxious that you want to get because you think it's going to rally another 100%. Look left. Last time it was here, it failed miserably. They fought over it for a month, for 1, 2, 3, 5, 6 days, a whole week, and it failed miserably. Why on earth would you want to be a hero and say this time it's different? It gave you 1 chance, 2 chances, 3 chances, 4, 5 chances. I'm failing. You still stayed long. I'm not complaining about anybody in particular. It's the mindset. And then boom. And if they put a stop loss, they're out. If they didn't, now they're deep in the hole. Now they add. Why add? Why not start down here? You would have twice as many. So just look left. Promise me you would do that. Try it. Just try it. You would just get so much clearer conscience with your entry point. And you're saying it's bullcrap. Okay. How about this level? Can I show you the importance of this level? Would you believe me if I told you this level, you could have foreseen it from February 23rd? Okay. Let's go to set February 23rd. This tick right there. You can't even see it. Look at that candle. That's where it opened and closed. That's the high. And that's the low. I mean, they don't make them crazier candles than this one. I have never seen a candle like this that I remember. And that, my friends, is that white line that goes under these. That level is right there. From February 23rd. They closed at it here, almost to the penny, and then now they're debating it. So, what's the next action in Lucid? I put orange lines. Those dotted orange lines are the next personal actions. If it goes above here, I will trade it up. If it goes below here, I will go long on a more of a swing trade investment type. If it loses a 35.20, I would be out because it's going to 29. What? I'm not telling you it's going to 29. I'm saying if it loses that February 23rd candle, I think they will want to bring it below 30. And I have a wake up at 31, start looking. Look, fail. A huge breakout from exactly the same spot. It's not a coincidence, folks. Look at this candle right there. So just look left, get a little more educated. Hopefully I just planted a seed. I just want you to have a fun year. This is not fun. It's a fun car, fun stock. This is not fun. You take the trade and 2 weeks later you're down 50%. It's cut in half. It's demoralizing. Okay, you want to hold it for the long term, but why not start at with 200 shares instead of 100 shares for the same price? It's ridiculous. If you could avoid the easy mistake, that'd be great. Make that your goal. We all pick good stocks. We get hurt with slightly off timing, some bad luck with timing, some headline breaks out here or whatever. It cuts both ways, but it's usually we pick the right stock and the timing is a tough one. So just look left to give yourself one little edge over the competition. Signing out. Enjoy the holidays.